Bitcoin has skyrocketed from $26,000 a coin to more than $33,000. We're speaking today on the 27th of October. In the last 1 month, what exactly happened and what's next? We'll be discussing this theme with our next guest, Kevin Maloney. He is the CEO of ITrust Capital and has previously worked at major institutional investors, including PIMCO. Welcome to the show, Kevin. Pleasure to host you today.
David, thank you for having us. Appreciate it. And congrats on the success your channel is having to date. Great job. It's nice to have a conversation with you.
Thank you very much. I appreciate it. And it's nice to learn about iTrust as well. We're going to be talking about iTrust and the unique benefits of the IRA. But first, let's talk about the Bitcoin market. What exactly happened in the last month? It's my first question to you, Kevin.
Obviously we've been watching the news carefully. It's interesting to see the regulators come out. There's fines against large incumbents out there that we're reading about. There's settlements happening. Lawsuits are getting, thrown out for various reasons, and people aren't refiling. And then you have the traditional finance folks coming in saying, okay, now we want to file our Bitcoin ETF. I think, look, I'm just speculating. We're just on the sidelines cheering along, but we have significant assets in Bitcoin. Our audience are big supporters. And I think you have the traditional finance folks jumping into the arena. And as we get more regulatory clarity and we all provide more transparency to the investing public, and we work together on just providing more information and educational resources, people are getting more comfortable. And I think the institutions are jumping in. Ultimately, I think someone will get approved here before year end with the Bitcoin ETF. And I think that's going to give a lot of comfort to the masses, the crypto curious people out there, people like me that are in this demographic of people that aren't necessarily fanatical experts, but they are curious enough to want to participate. And I think that we're going to see some traditional finance people get approved or groups get approved. And that's going to give a lot of comfort to everybody else that's been on the sidelines. Hopefully that spurs what could be, the next bull run. I'm excited about that.
It's interesting to note the Bitcoin price pattern over the last 30 days because stocks were down tremendously, and usually the stocks are correlated or have been correlated with the Bitcoin price. Not the case in the last 30 days. Are we starting to see a divergence between Bitcoin and stocks, or do you think this divergence is more or less short-lived?
I think it's short-lived. I think people are running to, I'd like to see a run to quality. And if that quality could be in the crypto arena, that would be amazing. Right now, it's tough to say. It's tough to say. We had a inverse relationship in the early days, and then we saw a little bit more correlation to the market. And now we see, what we think could be a mini flight to quality, and we'd like to see more of that happen. It is probably going to be short-lived until something is approved by the regulators. And again, we're bullish. We think that it's a really good thing if large institutions come into the marketplace and get approved. The more regulated entities that are approved to participate in this market, the more confidence we can give to A, the regulators, and B, the investing public.
You sounded pretty confident that a Bitcoin ETF will get approved by the SEC. What are the biggest indicators that are pointing to this approval?
I don't have a crystal ball. I could be completely wrong, full disclosure, but, I think there's enough interest in capital and resources going behind this. And if we work together with the regulators and let them know that we're going to follow the rules, we're going to participate with transparency and education, I think we can build the rapport and provide the comfort that the investing public and the regulators are going to want and need so to give us a chance to continue forward. And there are some large institutions that are very connected with deep, resources that are going to get this thing done. So I'm pretty confident something will probably get announced by year end, and we're excited. We're excited that some people are putting their stake in the ground and want to participate. And I think the Ripple case that we've all read about over the last few months it will end up having blazed a path for many to participate after.
Now, once it does get approved, assuming it does, the speculation or assumption here is that institutional capital will flow in at record levels. Is that something that you believe in as well?
I think people are going to step carefully. Yes, I think there's a lot of demand out there. It depends on the market, the economy. We have some global distractions happening around the world. So You've got some conflict that we have to be careful to keep an eye out for. But I think there's enough curiosity, enough capital with inflation and high interest rates where people are going to participate. Ultimately, if if Gensler gets his way and institutions that hold digital assets are held through a qualified custodian, i.e. a trust company, we think that's also a great thing. So the ETFs are part of the puzzle, and I think that it needs to happen, and it should happen in a reasonably near-term time frame.
It was only a couple of years ago, I believe in 2017, that Larry Fink, CEO of BlackRock, called Bitcoin an index of money laundering. Why do you think he and many others in the traditional finance space changed their attitudes over the last couple of years?
I think that it is like any new sort of opportunity like this. I think you're going to get nefarious bad actors, but we saw that in oil and gas. We saw that in large, proven publicly traded companies. So you're always going to have bad actors. People are going to leverage and work the system for their own benefit. But ultimately, as we improve communications with the regulators, we improve transparency. And if we all agree to follow the rules, and as we continue to get more clarity on those rules, I think I think some great things could happen. But yes, in the early days, it was very anonymous, and there were some bad actors, and there still are, using what appears to be anonymity to do bad things. But eventually, you can see where the dollars are flowing. You just don't know who's exactly getting it on the other side. And I think we're getting, a little more comfortable with that process and how to track those things.
Yes. That aside, the attitudes of major institutional investors have shifted. It wasn't just Larry Fink. Jamie Dimon back in 2017 called Bitcoin stupid, or I think he was referring to cryptocurrency overall. And it's interesting to see the attitudes shift in favor of cryptocurrencies and Bitcoin over the last couple of years. What contributed, do you think, to this shift in positive sentiment from the biggest players?
I think the fact that it wasn't short-lived. Certainly, there's been a shift. Whether it's the attitudes of Larry, Jamie, and these other large influencers out there in the traditional marketplace. I would probably bet that these individuals own significant amounts of digital assets. And so they probably have dipped a toe in the pool recently or over the last few years. Ultimately, maybe they thought it was going to hurt their business. And they probably saw some demand come in from the high net worth family offices or other large, private clients. But at the end of the day, if we can guarantee transparency and give more safety, security, and peace of mind as it comes to custodian or being a better steward or custodian of these assets, I think people's minds are going to shift. Ultimately, the people have spoken. There are 20 plus million Americans that have invested in digital assets alone, and many of them are invested long-term through their retirement. Now, our investors at ITrust Capital, like many of your audience here, are mature working professionals, very sophisticated. They understand cycles, and they are not betting the farm on digital assets. They're curious, like I am. We're all crypto curious, but they are not betting the farm. They are probably betting 5, 10, up to 20% of assets into the digital market, digital asset space through their IRAs, their individual retirement accounts. And they think, they make the decision, right? These are self-directed IRAs, and people are participating, and they believe in the long term. Now, I think there's a lot of digital assets out there probably won't work out long term, but there's probably a few hundred out of the multiple thousands that have potential strong viability that could be the next, FANG-like companies, and we hope they stay in the U.S. The regulators need to work with us in the marketplace to create an environment of transparency and regulation so that we can create those jobs and taxes and everything else here in America. Otherwise, the next FANG, Facebook, Amazon, Apple, Netflix, Google-like companies are going to end up outside the U.S. And so I think ultimately traditional finance people are getting together saying, there's a way this can be done to serve the need of the curious, be more transparent, follow the rules and regulations. Let's work with them to set those rules and guidelines and keep jobs and the economy flowing here. And I'd like to see that happen. We're big proponents of that.
Let's talk about your personal background. Did you over your career, and you've worked at a number of firms, including PIMCO as a compliance officer in the late 90s and early 2000s. Did you at any point change your attitude towards cryptocurrencies following the dawn of Bitcoin, and then up to now? Did you at any point become, obviously you're more pro Bitcoin now given your line of business, but at any point before, were you skeptical of the technology or the asset class?
I've been consistently curious, I would say. From since the 90s, I was always a proponent and asking internally at PIMCO when were we going to add more of these alternatives. Back then, it was hedge funds. We're going to add alternatives, hedge funds, and real estate. Now, PIMCO is a big player in those categories with over $2 trillion in assets under management. I've been consistently curious from the beginning. I'll be honest, I didn't always understand it. The little bit I learned about it, I thought people would probably take advantage of the system, but I thought the technology as it relates to blockchain in general and the potential for that is very disruptive and real. Being able to transfer assets around digitally in real time without a middleman is an amazing opportunity. We shouldn't have to hit the bank cutoff at 1:15 or 1:30 to get a wire out. You should be able to send that real time any time of night. I sent a lot of ETH to the UK recently, and that arrived 3 to 7 minutes later for a very tiny gas fee, and it was received. So I'm a big proponent of reducing reliability on the middlemen or women, especially if it's there's potential for human error. That element in the equation can be dangerous, and if we can reduce fees, reduce friction, and increase transparency and efficiency, ultimately the investing public, the retail public, guys like me and you win. And so I'm a huge proponent of the blockchain technology from that perspective. But no, in the early days, I did not completely understand, and I still don't pretend to, all of the details around all of these coins out there. But I think there's a lot of potential.
Right. Do you think stable coins will replace fiat currencies as the dominant transaction method in the future?
I know there are some very big players that we're in communication with currently that have a pretty strong vision for leveraging a stable coin for governments and people around the globe to trade with. We'll see what the uptake looks like. We'll see when that actually starts to transpire. But there are some big players working with large governmental agencies and financial institutions about implementing stable coins that can be used for transactions for the bankable and the unbankable, for those that trust their governments and don't trust their governments.
Well, let's talk about storage of Bitcoins now, a big topic following the collapse of Celsius and FTX. People have lost some trust in centralized exchanges, but there's another option, which is IRAs, which I believe is where ITrust comes in. Tell us how this works first.
Yeah, so ITrust Capital, we've been around since 2018 timeframe. We've worked in, we have digital assets that are available to our working professional clients that I mentioned, individual retirement accounts. These are tax advantage retirement accounts that under the ERISA Act of 1974 allow investors to participate in alternative investments, and they can self-direct these investments as long as there's a third-party custodian. Now, you have to have a trust company or a qualified custodian to be the custodian, and we don't let people hold their own keys. We work with BitGo and Fireblocks to hold those cold and hot storage keys for accessing client assets. So the benefit of people that are like me, working professionals that are crypto curious, and you're not necessarily an expert, but you're curious enough to participate in the potential for blockchain economy, and you're not betting the farm, you can open up an account at ITrust Capital. There's long-term tax advantages to having an IRA. If you're saving for your retirement, we don't recommend anybody bet the farm. We don't have a sales team. We don't make recommendations, and we don't pay commissions. It's all self-directed. So we are the dashboard that allows our clients to log into and see and control their SEP IRA, Roth IRA, or traditional IRA. And you can toggle between those different IRA accounts, and you can track your crypto and your fiat, and you can self-direct. You can buy, sell, trade, or transact on our platform around the clock. That's what it allows you to do. And there are tax advantages so that long term, if you wait till after 59 and a half, you can grow your assets tax-free in the IRA.
Can you explain these tax advantages in more detail?
Yeah, I mean, we're not, tax experts or consultants. So I always have to say, please consult with your tax consultant. And, we're not a broker dealer. We're not a registered investment advisor. So again, we don't pay commissions. We don't make recommendations, but under the law, there are certain tax advantages if you take pre-tax dollars or after-tax dollars in a traditional or Roth IRA. It allows you to invest into these alternatives, whether it's real estate or crypto. You can get in and you can hold them long-term. And if you hold them long enough at a certain age, when you start taking out those assets, you have certain tax advantages. These assets can grow tax-free depending on what sort of IRA you've set up. There's a lot of rules and regs around it. And we try not to advise people on what to buy, or we don't advise people on what to buy or how to set it up. But there are restrictions on how much you can put in each year and what you can take out with and without penalties at certain age timeframes. So if people are crypto curious and they are planning for their future, and you definitely want to participate in this economy, we think it is wise for people to look into options like this to grow assets in a tax advantage manner. And that's been quite successful. We've had 200,000 people sign up since 2019 timeframe when the platform actually launched. We've had 45,000 people fund accounts to the tune of multiple billions of dollars. And we've transacted nearly 7.5 billion in crypto transactions with no money lost on our side, right? Our clients buy, sell, trade on their own. We commit to keeping their capital safe and secure on our side through proper security and compliance protocols and using the right channels like Fireblocks for cold storage.
And if someone were to ask you, well, how do we know that the storage is safe? Someone who doesn't understand the space, how would you explain this to him?
Yeah, I'm not an expert on Fireblocks, but it's pretty incredible the technology you have. And by the way, BitGo's a viable, cold storage solution as well. We have access into our Fireblocks workstation, so we can see the assets are held real time. We know exactly what's coming and going, and we can see these transactions. We have to approve them. There's multiple parties internally here that have to approve. And so there's a lot of transparency that we get. The security side of blockchain, I can't speak to that, but there's multiple videos on it. But we are confident about blockchain's ability to deliver the safety, security, and peace of mind we need to have in place for our clients. And the technology continues to improve. Most of the errors, most of the breaches, most of the theft out there has happened from people that are either lazy with their own keys or leaving their devices out where someone else can get in and buy and sell and trade. We're not a payments platform. So somebody could technically hack into my IRA account at ITrust Capital, but they can't send any money out of it. They can sell my Bitcoin and go to cash. They might be able to even buy some Ethereum from that position, but they actually can't send it out to somebody. They can't send it out to another wallet. So the way we have it set up, you can put capital in and you can send in a video request to get your dollars out in fiat, but you can't actually break into my account and send it to your friend in Belarus or somewhere else around the globe.
Excellent. And where can we learn more about iTrust?
ITrustCapital.com. We've been around for multiple years now, 5 years now, and we've got an excellent team of people. I think the thing that we do that's unique and different is we service our clients. We actually pick up the phone or answer the emails when there's any issue or challenges or questions. And if you're on other large exchanges that are doing a good job with being able to give you the ability to make payments and transact and buy and sell crypto, that's phenomenal. The challenge is if you have an issue and you're losing money, will these people be able to answer your call or email? And we pick up the phone around the clock and answer emails around the clock. And I think that is a big differentiator. If you're going to work with a qualified custodian like Fortress Trust and Fireblocks for cold storage and give that safety, security, peace of mind, if there is an issue, because issues come up, you've got to be able to address these issues real time in email or answer the phone call, because we have working professionals that are entrusting us with their capital, and they want to know there's a voice on the other end that can pick up the call and answer their concerns. And that's what we do. It's hard to do. It's hard to scale that. but we're doing it with excellence right now because we're getting good feedback. And that's something from a compliance perspective and a service perspective. And then ultimately, also what matters is the pricing and liquidity settlement perspective. Those are the three key areas, offer products and services and proper settlement, compliance and service. And if you can do that well, I think you have a good business. And so far, we've had a pretty viable business with sticky customers. If you treat them well and don't overcharge them, we found that people will stay. And so we're happy right now, and we're excited for the next run up.
I think that's a generally good business principle, not just exclusive to the Bitcoin IRS space. But thank you very much for educating us about not just ITrust Capital, but also the Bitcoin markets. I appreciate it. We'll speak again next time, Kevin.
Thank you, David. Have a good day.
You too. And thank you for watching. Don't forget to like and subscribe and follow ITrust Capital in the link down below.